Hello, everybody, and welcome to our podcast today. So today with us is a really cool special guest, Dr. Buck Joffrey. Now, Dr. Buck Joffrey is a board-certified brain surgeon, entrepreneur, asset manager, and podcaster. Overachiever? Maybe. We'll find out. After finishing his residency training in 2008, Buck took a different route than most of his colleagues, having witnessed the 2008 financial crisis and the effects it had on hardworking professionals around him. Buck decided to take his financial life into his own hands. So after starting a series of businesses in the healthcare, technology, real estate sectors, Buck became financially independent only 5 years after residency and made it his life's mission to provide financial education for hardworking, highly educated professionals. So today, Buck spends most of his time as a professional investor and educator through his show Wealth Formula podcast. He's also the author of the #1 best-selling book, 7 Secrets of Eternal Wealth. In it, he discusses outdated and dangerous investments paradigms that he believes will result in the generation of high-paid professionals dying broke, which we'll dive more into today. So thanks for coming on the show. I'm excited to have you.
Thanks for having me back.
Having you back. Yeah, this is the second time you've been with us. So powerful last time, and I said, man, we didn't even have time to jump into all the topics, so thanks for coming back so we can talk a little bit more.
You got it.
So for those of you that didn't listen to the first show, why don't you tell them a little bit about yourself and how you got to where you are now?
Well, yeah, so you mentioned initially that the brain surgery thing. I started out, I did the, I went to med school, started out in a neurosurgery residency, and actually 2 or 3 years into it decided I need to do something that's a little bit easier in my life. So I stayed in surgery, but it just sort of had a neck without the brain. And then I actually did a plastic surgery fellowship after that. So yeah, massively overtrained. And then finished this training in around 2008, just in time for the financial meltdown. And well, the good news for me was that I was completely broke. I had no money, so it didn't hurt me at all. So
that's good.
Yeah, no, it's really good. And in fact, I didn't know any better. Having done some plastics, I started a plastic surgery business. From day one, I decided I want to do this as a business. I don't want to be stuck doing this for 20, 25 years like everybody else. So I started that. Crazy me, starting that in 2009 in the depths of the recession, but it worked out well. And then I phased myself out of that, started another business, and then a third business, and ultimately started investing with the money I was making and found what I think is probably a much better way to invest, to the extent that it has allowed me to basically leave the practices altogether. I mean, I still own them as businesses, but and really live kind of with some level of financial independence at this point. Obviously, you always want more, but but I think I'm fortunate to be in a place I am this short period after training. So
one of the interesting things concepts that I've learned in following you is this relationship of wealth to time. So tell us a little bit more about that. I mean, how do you best describe wealth?
Yeah. Well, I mean, for me, this has also kind of evolved a little bit. When I started out down this journey of starting to invest and trying to get some passive income, things like that, I was inspired by Robert Kiyosaki, who I'm sure a number of your listeners probably listen to. I have had an opportunity to meet him and tell him my story. It was a real kick. A really good guy. But the idea initially was, it's your wealth is measured by the amount of time that you have. I mean, if you just stopped working today, how long could you just keep living the life that you want to live? And that's that's a pretty good place to start, right? I mean, if you can live in perpetuity and just be happy, then you're wealthy, right? That's sort of the definition, and that becomes more denominated in time rather than in dollars. So certainly, if you live in Alabama or Mississippi, you're not going to need as much as living in Santa Barbara, California, like I do. And so that's part of it, and that's evolved into what I have discovered, which is something that I think I'm fortunate to have discovered, which is time without some kind of mission is kind of boring. and not really worth living. And so I've evolved that into, really just having the freedom to do what it is that you want and what you would do if you could do anything. And for most people, I would say, Ty, that your listeners in particular, because we're all entrepreneurs, you would not be playing golf. That's a complete fallacy. And that's what a lot of people say. They say, well, if I had all the money I want in the world, I'd just play golf. No, you wouldn't. You'd be bored out of your mind. You would find a way to create a business out of things that you really love, and you'd do it again. But this time you would do it the way you want to do it. And you wouldn't worry about risk because you had plenty of money coming in. That to me is true wealth.
How do you think in the people that you're talking to, do they see wealth the way that you see it, the way you define it?
I think that the biggest issue is I don't think people really think about it. I think that's the biggest issue. I mean, we're just in this, most of us are in this. I don't think there's anything wrong with money. Believe me, I love money. But as an entrepreneur, money has become, for me, and I think a lot of your listeners will understand this. It's a way of keeping score, right? It's really a way. So if you're an entrepreneur and you're like super excited about doing stuff, how do you judge whether or not you're successful? Generally, it's because you're making money. So it's a way to keep score. So a lot of us are, we like these little dopamine hits of, there's your doctor reference, by the way. You like these little dopamine hits of, nice income and stuff like that. But we don't really have, most people, again, if you go back to that question, what would you do if you had all that money that you wanted? What would you do? I really haven't thought about it, right? That's where I guess I just play golf comes in, and that's just not true. Now, the problem with that, and this is where I think it's really important to ask that question, is that if you don't define that for yourself, like what is success? What is it that I'm really like, what would be ideal for me? Then it's like it's like you're this powerful entrepreneur. You're like a 747 jet traveling at 500 miles per hour without a destination. And that is that's a recipe for dissatisfaction in life. And again, I'm not talking about, doing anything. I'm not saying that. And I call that destination, by the way, I call that your mission. Now, for me, the mission thing, you got to clarify, because sometimes it makes it sound like, oh, you got to have some mission that, I'm going to improve humanity. I'm going to do this. You don't have to have that. Whatever. I mean, some people are just built differently. A mission to me is what you would do with your time, if in really thinking about what you do with your time, if you had all the time in the world and you didn't have to worry about money anymore. Guess what mine is? Mine ends up being something that makes me more money.
As many entrepreneurs,
a lot of entrepreneurs would be, because I'm still keeping score, and for me, it's the game. I love it.
So do you find that a lot of the people that you help are still in this rut of trying to trade time for money?
Well, a lot of my listeners on my podcast are high-paid professionals. I mean, and I think, a lot of doctors and lawyers and software engineers, there's no question about it. I mean, I think the issue for them is that no one's really ever outlined, again, no one's really thought about this. Like, in order for you even to get to the point where you're like, I don't want to trade time for money, you actually have to take time and create some sort of infrastructure in your head about how things should work. But we generally kind of accept financial conventional wisdom. And, we say, okay, well, what do I do? Well, what are you supposed to do at this point? And this is what gets me about entrepreneurs is we are some of the most creative people in the world when it comes to making money. And then when it comes time to investing it, we invest like our grandmas, right? But that's crazy to me, because I'll tell you that I've made a lot more, despite having started multiple businesses, at this point, I'm making more money with my investments, they're all they were sown at some point, and now they're really coming in, and, that tidal wave of income from that's coming in now. So yeah, I don't think people even think about that. I don't think people have the idea that, that they should be trying to, do things differently, because there's conventional financial wisdom is Wall Street. And, you got your 401k, did you max it out? Yeah. Okay. Then you did it right. That's all we really do. We just follow what everybody tells us to do. Most of us entrepreneurs should be better than that, but unfortunately, most of us still don't seem to get past that.
Do you? What are your thoughts on investing in the stock market?
Well, but it's a complicated one. For the most part, I don't invest in the stock market. Now, there are some pretty unique products that I've learned about in recent years that have now given me exposure to the stock market, but only the upside of the stock market, not the downsides. So
Which is a good place to be.
Yeah, so right. I mean, we talk about some products that the ultra wealthy use all the time, and they're basically, options plays where through insurance products that, you can take 80% of the upside of the market, leverage it, and then if the market crashes, not take any of it. So a 7% year in the S&P 500 turns into 20%. And then if there's a 20% drop, you lose nothing. So yeah, I do have exposure to the market, but not in an uncontrolled fashion, right? I engineer my wealth. That's what all wealthy people really do when they start thinking about money. None of this is up to chance. I mean, it's all designed. There's ups and downs, et cetera. But the reality is, you've understood this from a level where you're not just speculative. Most people just throw money in. It's completely speculative. And the worst part about it is mutual funds that these 401ks typically go into. As much as the market has performed in the last 30 years, 3 decades, the average, the actual gain for the average mutual fund owner has been about 3 to 3.5% per year. If you take inflation and cut off 2% of that, it's about 1% per year. And if you take the rule of 72 and say, how long does it take you to double your money? Well, in real money, that's about 72 years. You might as well just not. It's just worthless, right, to do that. You're just paying for somebody else's retirement, these wealth managers. So,
yeah, and I've often heard you refer to stocks not even really being considered assets in your mind. So what do you consider to be real assets worthy investing in?
yeah, I mean, and some of that's obviously some level of hyperbole on my part. Obviously, the equity, the equity markets are by definition assets. I think the thing that I don't like is what they represent typically, and they represent companies, but let's look at your typical example of a valuation in the stock market, right? So you and me, we get small businesses. People you listen to have small businesses, and if you try to sell them, maybe you'd get 3 to 1, 4 to 1, 5 to 1 EBITDA, right? Then you look at a company like Netflix, which is at about a 400x EBITDA. So what exactly is it that you're buying? And then it goes up and down on whims. It doesn't go up and down on the fact that it's making money or not making money. All of a sudden, North Korea fires off a bomb and you lose 10% of your stock. Why is that? It makes no sense. I don't like that kind of lack of control. To me, a real asset is something like, for example, if you're an entrepreneur, your business is a real asset. To me, if I have fractional ownership or complete ownership in a real, apartment building that's maybe 200-300 units or whatever, that's really owning something. And yeah, it may go up and down in value just like your business does. But as an entrepreneur, what happens when your business goes up and down in value? Do you care? No. What you care about is whether or not you're making money, right? And at some point, you may want to sell your business, and hopefully you can do that for a nice chunk. But in the short term, what you're really hoping to do is see performance. So if people stop seeing their investments so much as buying stocks, bonds, and mutual funds, and more buying streams of income, they'd probably be better off.
Makes a ton of sense. What about another thing you reference a lot that I like is investing for cash flow rather than capital gains. Tell me a little bit more about that.
Well, I think So for me, and again, this is an evolution thing, where I think that if you are, you know, most people want security in their life, and when they think about security, um, the conventional wisdom tells us that it's, and this is not going to be your audience, but certainly mine, typically is people who, get a good job, put money in your 401k, invest for the long term, which of course is Wall Street's way of saying, well, the market's going to crash, you're going to lose all your money, and then it won't be our fault because it's nature. That's what it means to invest for the long term. But yeah, I mean, I think initially, if you're looking at security, again, if you were a Martian dropped into this world, and you were trying to figure out, like, all right, you got a job, you want to work less, what would you do? You would, would you buy stocks, bonds, and mutual funds, or would you try to buy other income producing assets? I think passive income is sort of an abused term too, because it just, since Kiyosaki's books, people pretty much just think it's like buying a house and, getting your 10% return. With my businesses in Chicago that I left behind are all passive assets for me now. They all generate income, right? So I think that focusing on passive assets first and foremost is really critical. Now, once you get to a point where, now you've got enough where you're like, I'm pretty comfortable. That's where I still believe in, I don't think you have to just keep being a cash flow person. Take some shots down the field. I mean, I'll tell you, I've gotten, believe it or not, I mean, it's so different from my ethos. You may have a hard time believing this, but I've gotten really into cryptocurrency. Initially, it started out as a hobby. I did well. I got really interested in the technology. Now I'm a believer in this technology and ultimately this movement. And I also see opportunities that could be, really enormous, right? Now, does that mean I, put all my money there? No, but I take about, 10%, now, and I invest in asymmetric risks, right? I say, okay, instead of buying a Maserati, I'm going to buy so much, Bitcoin or whatever. So I think there's a role for all the other things that we do, but first and foremost, you got to, if you look at it from the standpoint of a hierarchy of investing, right? Like a Maslow's hierarchy of investing or something like that, that first and foremost, you got to make sure you can pay your bills, that you're taking care of your family. So,
And what you reference is interesting, because you're saying, hey, look, had an interest in crypto, made it a hobby, learned a bunch about it, then took a step of investing. Do you find that that's a problem with people, is that they don't really understand what it is they're investing in?
well, no question, right? I mean, but it's even, I mean, we can use crypto as an extreme on that, but in reality, if you're just dumping money into mutual funds and you don't even know what stocks are in those mutual funds or what you're investing in, I mean, I think that would probably be about 99% of people in this, in this country. I mean, I would be shocked if more than 1% of people actually knew what was in their portfolios, right? So yeah, I mean, I think the bigger question is, you know, do we under value the importance of understanding what it is that we put our money into? And I think the answer to that is yes. And I think if you're an employee, you're probably just, it is the way you're programmed. But as an entrepreneur, I think you have a unique worldview. And I think it's an opportunity to say, hey, I can, I'm a creative person. I figured out how to make money. And if I figured out how to make money from this business, there's chances are that I can figure out better ways for my money to make me even more money. And in my experience, believe me, I got no economics degree. I don't have any real estate degree. I don't have anything like that. But if you're an entrepreneur and you're smart enough to create a business, you're smart enough to figure out how to put your money to work.
Do you believe in creating because you have multiple different ways that you're making money. Do you think that that's an important part of the equation, is creating these multiple income streams?
For me, it is, and I think in general, it should be for people. Again, you go back to So there's two things. So if, from the standpoint of a lot of my listeners are high paid professionals and stuff, and they think they have a secure job. And the question is, what is security? My brother, who's a very, very smart guy, was a chief investment officer of one of the Middle Eastern countries out there. So managing literally billions of dollars for this sovereign wealth fund out there. And he kind of wanted to try something entrepreneurial, so he left to Dubai for this opportunity. And the next thing you know, the entrepreneurial company in Dubai had some difficulties and decided they couldn't afford him anymore, and they got rid of him. So now, I mean, he's doing fine. He's made plenty of money, but that's not job security, right? That's not job security. But guess what? The guys who we went to work for, they still have a business. They still have, all this stuff. So from that standpoint, I think the idea of security is overrated. From the standpoint of business owners, I think one of the mistakes that we make, and I see this over and over and over, and I've been guilty of this, is that you keep dumping your profits exclusively back into your own business. Man, is that dangerous. Man, is that dangerous. And this is, of course, going back to your question about multiple streams of income, right? Now, ask yourself right now, if you're a business owner, something bad happens with your business, where else are you making money? That can get really scary. And I'll tell you, when I had my cosmetics business, the first business I had, it was flying. Like after a year, I was making 7 figures after the first year, profits. And something random happened where, with the Obama re-election in 2012, the month before the election, for some reason, you guys might have experienced this at some point, everybody just stopped buying for no reason at all. There was nothing that had changed in 2012. And we had like a negative $300,000 month. And it's like, talk about scary. I had just put a huge chunk into a building I bought. I didn't have any liquidity sitting around. And that put the fear of God in me. And I said, from now on, I am not going to let that happen. So that's when I really started to diversify, not only with, I started other businesses, in part, not just because I was crazy, I want to start other businesses. That's one of the things that made me feel better. And ultimately really just started investing out more and more outside of things that were directly related to my business.
Well, do you have a rule of thumb of cash on hand? Because I've been through what you described, right? I mean, I owned a mortgage company when the whole thing collapsed.
Oh, wow.
And one lesson I've learned from that is reserves. The more reserves we have, the more time we have to figure out the solution to get through the problem. So I think it kind of makes sense to have both, right? Have multiple streams of income and have the cash on hand to buy yourself the time. But do you feel the same, or do you think there's a certain percentage, or is there a rule of thumb of what maybe you should be doing in regards to reserves versus multiple income streams?
I think I don't have a rule of thumb, but I mean, I think reserves are useful. But if there's a situation where all of a sudden for whatever reason, your business no longer is viable, and believe me, in these days, a lot of people will be facing that problem, whether they know it or not, because of various advances in technology at any given point. I mean, look at all the bookstores, right? I mean, they're gone. What happened?
Blockbuster, Sears, right? I mean, it's all going Toys R Us.
Yeah. So I think that we have to be cognizant of the fact that there could be, these sort of black swan technology events, et cetera, that could hurt us. And it's in every area. And if it's not technology, it could be even in medicine now, look, all these private practices are all getting bought up by big companies because, reimbursement has gone down so much for doctors that they can't do it anymore. So my point is, don't, just protect yourself. I think it's really important to make sure that you have a stash of your cash, not only for reserves, but that you're in good times being cognizant of the fact that times may not always be good. And that's when you start planning for when they are not good. I feel okay because I've got this other thing going. Maybe it's maybe it's another side gig, or maybe it's maybe you've started really investing your money so that you've got some level of cash flow coming in now, you know? I think this is a very important thing. And I think a lot of entrepreneurs need to really pay attention to that and think about that. I mean, one of my best friends, I always just say this because he's not going to listen. I know he's not a listener of your show or any podcast for that matter. But I mean, I worry about this guy all the time. His business is kicking butt, and I keep talking to him about investing, and so he's doing nothing, because he's so darn, positive that he's going to keep, pulling out $1 million a year. And I just, I, like you, I've been through the worst case scenario. If you put yourself, Ty, back in those shoes, back in the shoes to the guy you were when that happened, could you have ever imagined that what happened to you could have happened?
Oh, no.
Right?
And it's interesting because nobody can. I stand on large stages, and that's one of the questions I ask, right? How many of you think you won't be in business in 12 months? Nobody raises their hands, but you and I both know that like 1 or 2 out of every 3 of those people will be, but they're oblivious to the fact that it can even happen.
Exactly. And to me, that is the impetus. Like, okay, so maybe, I mean, listen, most people who have businesses are working so hard in their business that, they're not going to go start another business like I did, or whatever. But, your investment should be performing much better than most people's are, and it doesn't have to be that difficult. I mean, I have a couple of buildings I just sold, or I sold one yesterday. I held it for 3 years and had a 500% return with cash flow all along the way. I had another one that's going to close at the end of the month. It's going to end up being about a 400% return with cash flow all along the way. I only held it for 2 years, 2.5 years. That's unusual, but what I'm telling you is that like it shouldn't be unreasonable for you to think that you could get over 20% annualized returns on your money. And I can tell you that from personal experience. I can tell you that that's how I have done this. And it's not because I'm trying to, I'm not a guru at all. I'm just telling you as an investor. The reason I do that is because I've taken my entrepreneurial superpowers, which each and every one of you has, and I have used those powers not only to make my business grow, but have employed my money to do the same.
What are some of the best investment opportunities that you think are out there now? And you've touched upon real estate. So it sounds like one, but do you focus on residential, commercial, multifamily? Is there other assets that you think are strong and worth considering right now?
Well, I mean, I think the big thing is it all just depends. I mean, I invest as an investor now because I've stopped buying buildings necessarily just by myself. I'll buy them maybe as a part of a syndication, as a private group of people who's going in to buy stuff. It's not whether the opportunities are available. They're always available. It depends who the operator is. I invest in people, right? I invest in groups that I trust and have a great track record. And that's my way of doing things. I think to lump sum, you can't really lump something up right now, or really for the most part. I mean, multifamily. Let's take multifamily, and I like apartment buildings. It's really my favorite because people got to live somewhere. And back in 2012, 13, 14, when I was buying these buildings, I mean, mean, honestly, the reason for selling for 400 or 500% returns is I got lucky, right? I mean, all the money, I mean, these markets were just down and I bought at a good time. They're going up. You just can't always rely on that. That's the problem. So to the extent that, is this a market in which you can get lucky in when you buy multifamily real estate? The answer is no. But there's always people who can turn things into gold by the skill sets they bring, by the things that they're doing. So I have partners in multifamily that my investor group, that we work with, self storage, so there's a variety of things out there, and then so it's not really whether, to me, it's not really ever about whether it's a good time to be in a certain thing. It's, do I know people who can make money in this environment?
And you've got a great book on the 7 secrets of eternal wealth, and I think we hit on some of those, but do we have time just to touch on a few of those principles that are in that book that we haven't maybe jumped into already?
Yeah, I mean, here's what I'll tell you. I mean, it's pretty, the book is pretty straightforward in that, I just say for most people, I just put out this idea that, these principles are simple. There's cash flow, which we talked about. I think understanding your investments is really important. We talked about that, which is, again, 99% of people out there have no idea what they're investing in, right? The wealth advisors call them buckets, but what the heck is what's in those buckets, right? I mean, seriously, you've heard buckets, right?
Well, I have. They just try to break it down into like
Right.
the simplest form that we may understand.
Right. And how is it that magically those buckets grow at different paces? And if that were true, why wouldn't I just put all my money in the bucket that grew the fastest, right? I mean, so there's that. There's I invest what I like to call as real things, tangible things. Um, you know, uh, some people call it precious metals, things like that. I don't really so much invest in precious metals because I like to have function to them too. Like some way somebody has to live there. There's a production going on of something that people need, whatever. And then in this environment too, where we are, and I've been thinking about this one a fair amount lately, is that you know business is generally good right now. The economy and GDP growth is pretty darn good. It's been as good as it's been. But times like these, to me, are the scariest times of all, because this is when people are getting greedy, right? And so to me right now, what I'm planning is, what do people need? What do they need when the market turns? This is now, I believe, it might be the longest, or the second longest GDP growth expansion in the history of the country, and most of it, like until the last few months, was the most sluggish GDP growth. But it's going to turn. We've got a tremendous amount of debt. We just lowered taxes, which is great for you and me right now, but it's going to create a lot of more debt. The country is in a situation where a lot of things that we're doing are not sustainable. So eventually, we're going to be in winter again. So I like the idea of putting a certain amount of money into things that are essential. And for me, a roof over your head is pretty essential. And so that's why I like multifamily.
Yeah, and
The
that's
last,
one of the, I'm sorry, go
yeah.
ahead.
No, go ahead. The last thing
No,
I'll
I
say
like
is,
that. That's one of the core principles you talk about is investing in things investing in things that people need at all different stages of the economy, so you're always protected. Makes sense.
yeah, absolutely. And I mean, these are things that you can make, significant money on. I mean, I still, my returns in multifamily have been, off the charts, and again, you can do that and understand you don't have to go out there and buy yourself buildings. You just need to associate yourself with people who do, and you can invest in these things as easily as you do in stocks, bonds, and mutual funds. It's just you're investing as like a partial, like a limited partner situation, instead of just throwing money into a basket. And so you can absolutely participate in those kinds of things. The last thing I would just say is, and this should be very natural to people in the business world. You and I know that it's extremely difficult to have a successful business without leverage. And this is an advantage that entrepreneurs have. We know that if we borrow some money and we make a lot more money with it, then debt is good, right? And if we apply that to our investments, that the same holds true. The reason my returns are so high is that they tend to be in real estate, and all my real estate is leveraged, right? So if an asset doubles in price, I am getting not only the double on my equity that I had in it, but I leveraged 80% of it or 90% of it or whatever. I'm getting the double on somebody else's money, which is a bank. Right? So leverage is critically important in investing too.
Makes a lot of sense. Using leverage is what you describe in your teachings is basically a weapon of the wealthy. And I like how you basically break that down.
Yeah.
As we get ready to wrap up, what are some parting thoughts for everybody listening today? I mean, what are some the best industry advice that you've learned from going through and obtaining the kind of wealth you have that are just simple lessons that anybody should be doing now, or steps to initially get started doing the right thing if they're not doing the right thing now?
So, I have there's to me there's math behind wealth, which is the wealth, and because I'm nerdy and I was a good student, I borrowed from Newtonian physics on this, but is equal to, so wealth is equal to the product of mass, which is how much money you put in, velocity, how quickly you get your money back in your pocket from that investment, and leverage. Those are the three mathematical pieces to wealth. So literally, if you can put that into an infrastructure and start looking at your investments, like, okay, am I putting enough in? How quickly am I getting my money back? That's your yield, basically, right? If you're getting 10%, it's going to take you 10 years. That's not good. And then of course, leverage is just going to amplify everything. That's the math. That's the easy part. The hard part is where do you do that? And to me, I turn to especially for people who are making a little bit more money, maybe you make a couple $100,000 a year and you qualify for being what's called an accredited investor. It's not a test you have to take. You either are or you aren't, like pregnancy. But you can participate in a variety of things that you don't even know about. But if you want to do that, the key is that you have to do it with people who you know, like, and trust. So to me, the core components of creating wealth are the equation and then the relationships. And that's what the ultra wealthy know, right? It's like, how to make money. The math is easy. Now, who can you trust to actually pull it off? That's really like 90% of the battle right there.
So where can everybody go to learn more? I mean, we could go on forever because there's so many great things that you teach upon, but where can they go to listen to you, hear more, and learn more of kind of your strategies that have helped you obtain the wealth that you have now?
Well, you could, you certainly go to wealthformula.com. The podcast is everywhere. Like most podcasts, it's a Wealth Formula podcast. Pretty soon, actually, I'll actually be releasing a second podcast. Is my hobby is in cryptocurrency. So I have the first place I'm mentioning it, it's actually Cryptonomics Radio, which will probably be released in September, which is going to be a very serious show about the actual technology and news that's going in that direction, because I think it's huge. And then finally, if you want to download that copy of a book, you could even just text me. It's 44222, and just type in Wealth Formula, one word, and you can get a copy of that book. You could also get it from wealthformula.com as well. So,
Buck, thank you so much for coming on today. It's been awesome having you on again.
Yeah, thanks for having me, man.
So, guys, listen, everybody listening and watching, this is the guy that gives the advice, financial advice, to the uber wealthy, okay? And he's listening to them as students, learning the lessons from them, as well as himself, and applying those into teachings that you can absorb. So my advice is to make sure you go to wealthformula.com. We're going to go ahead and put that on the show resources page, as well as access to Buck's Facebook, Twitter, and LinkedIn profile. And then don't forget, you can also text the number 44222. And when you do text 44222, text the word wealth formula. One word, just put it all together. And that way you can grab the free book.
Yeah.
Yep. So there you go. So text 44222, text that number, the word wealth formula, visit wealthformula.com. I'm going to make sure that all those links are on the show resources page. Remember, none of this means anything if you don't actually take action. So listen to this podcast, check out the website. There's so much really invaluable information I know you're going to love. That's wealthformula.com. And also don't forget to text 44222, the word wealth formula, to grab your free guide, to grab your free book. So thanks again, Buck, for joining us. It's been an awesome having you on. And thanks again to everybody for tuning in. Make sure you check out wealthformula.com. Thanks, everybody. Have a great day.